Hey, it's James here, and in today's video, I want to cover some similarities between the SPY of today and the SPY of the dot-com bubble. If we go back in time, we'll notice that the final phase of the dot-com bubble actually lasted about 6 years. And during that phase, the SPY climbed 257.79%, and it did that in about 313 weeks. If we look at the market today, we're going to notice that from the COVID lows, the market is actually up about 248.39% to its high, and it's done that over the course of about 326 weeks. So there is some price similarity. There's also some time similarity. And this is one of many reasons that I do think the market will top in 2026. Also, in previous videos, I specifically mentioned that during the final parabolic phase of a market cycle, you typically will get a roughly 100% move, and it will happen in very rapid fashion. So, for example, if we measure from this low back in the April 2025 pullback, right now this market is up about 57%. So the SPY could have further to go. But if we jump over to the QQQ, we're going to see something different. Tech stocks have pushed even higher. They ran up about 84% from that low. And then if we look at the semiconductor ETF, SMH, we're going to see something very startling. Of course, these were driven by the AI bubble. And if we measure this from that April 2025 low to the current high, it actually pumped about 290%. Even if we go from this pullback back in March of 2026, just a few months ago, what we're going to see is this market pumped roughly 84%. All of these things combined lead me to believe that this is indeed the euphoria blow-off phase of a 17 plus year bubble. If you are a cryptocurrency trader or if you're a Bitcoin believer, I think it's critical that you understand this, because when you look at Bitcoin, Bitcoin has existed during this exact same macro bull market going back to 2009. So every time it's dropped, the belief has been, well, it has to go back up because that's what it's always done. But anybody who's ever traded knows that any uptrend works like that. You buy the dip, and there's actually a cliche, long until you're wrong. Because as you buy these dips along the trend, what happens? It goes up, it dips, you buy, 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 and it goes down. That's just the way uptrends work. It's how they transition in the ranges, and eventually how they transition into downtrends. So what you have to understand about cryptocurrency and the stock market itself is this has all been one uptrend with corrective phases along the way. If you try to trade these markets as if it's just one uptrend that can never turn into a downtrend, you're probably going to be disappointed. And if you look at Bitcoin, it's pretty obvious that this time is different. This is a Bitcoin relative strength chart versus the QQQ. We can see that the 2021 highs, they were never meaningfully taken out. Basically in 2025, it snuck above that, put in a bull trap, and then retraced. The price when the first US ETFs launched, so when institutional adoption really became a bigger thing, of course, was up around 165 shares of QQQ. We're down roughly 50% from that level. The 2017 high did not hold. Price moved back up, retested it in a bearish retest, and then moved down off of that. So this cycle is different. In fact, right now, if you had bought QQQ in December of 2017 and you bought Bitcoin in December of 2017, you'd actually be better off to be in the QQQ. Bitcoin has literally taken back over 8 years worth of returns versus the QQQ at this point. If you look at the total cryptocurrency market cap as a whole, it's even more startling because, as I've pointed out in past videos, 2025 was the first time in cryptocurrency's history that it failed to put in a higher high on the macro time frame. These were the 2021 highs. These were the 2025 highs. Again, this is a relative strength chart versus the QQQ. But what we're going to see is if we look at chart after chart after chart of Bitcoin versus other assets, we are going to see that it looks like distributions. This is Bitcoin versus the QQQ. This looks like distribution that started back really in 2018 and is now about to enter the markdown phase. If we measure it versus things like SMH, we're going to see the same thing. Again, put in a lower high versus SMH. This is Bitcoin. So this looks like distribution. If we do it versus the Mag 7, we're going to see the same thing. If we do it versus gold, we're going to see the same thing. So for example, here's gold. right? Looks like distribution, looks like the UTAD, looks like the last point of supply, which is right here. And it looks like we're actually just in the earlier parts of phase D. And again, if we measure it versus the Mag 7, this is actually the chart that I posted up in August of 2025. So I posted this right on this candlestick here. You can go see that on TradingView. Since then, all it's done is melt down, and this definitely looks like distribution to me. It looks like it wants to enter a markdown phase that could take this down another 50 to 75% from its current level. We could be looking at retesting those 2018 lows versus the Mag 7. A lot of people point to this and say, well, it's never done this in the past. Again, you're right, it hasn't, but it's also never put in a lower high during a market cycle. This definitely has telltale signs of distribution. I see a lot of people wanting to look only at a US dollar chart, and they fail to realize that it's not the US dollar is the absolute value that matters. It's how strong is your asset versus the broader market. And when the broader market itself looks to be in a blow-off phase of an epic bubble, and we know that historically Bitcoin moves down further and faster during bear markets, this all seems to paint a very clear picture that we're going to see a different type of behavior in Bitcoin this cycle, and that we're very likely to start to see the market itself, the broader equities market, start to melt down before the end of 2026. If you enjoyed data-driven content, make sure to give this video a thumbs up and subscribe to the channel. Perhaps share the video with a friend who might benefit. But please remember that I am just some guy sitting in a spare bedroom doing videos for fun. That means that nothing in the video is financial advice, and you should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Thanks for watching. I appreciate it. As always, please remember to invest and trade safely.